Volatility is at a record low in dollar rupee. Namaskar and a very good afternoon. Welcome to the audiocast from Kotak Securities. I'm your host and guide Anindya Banerjee. Ladies and gentlemen, RBI intervention is not allowing the rupee to appreciate beyond 72.70. At the same time, record inflows into the equity markets and big interest from foreign investors in Indian businesses through FDI, debt capital flows, and obviously the speculators are there. All are combining to ensure that any upside in dollar rupee is limited. So a spike, they are coming and selling, which means we have got a situation where the ranges have become so narrow, it is extremely difficult to trade on an intraday or even an overnight basis. The position view remains the same, which has been since June, that is sell on rise. So there are a number of ways to execute this view. One is you can wait for a spike to sell short on the futures. The stop loss has to be above 74. Once this 72.70 breaks, or let's say RBI allows the dollar rupee to drift below 72.70, it can go all the way down to 72. So then you make money. Or else, what you can do, you can use options to build a certain position. What I call is a put spread with a sell call. That will ensure that your entry into the market is at a very low premium. In fact, if you do it well, you could actually have it at zero cost. So that kind of a trade has worked amazingly well since June, because you don't know when RBI is going to allow the rupee to appreciate, and when it does, you will make a lot of money in such trades. So a put spread with a sell call. On the international currencies, euro dollar is under pressure. Why? Because we can say it's right now the sick man of the world. The vaccination drive is happening at an excruciatingly slow pace. There are 19 countries, they're haggling over the vaccine with each other. At the same time, growth is taking a hit because of the ongoing lockdowns. And the central bank, European Central Bank, ECB, they're not very happy with the euro at a higher level, because they think a stronger euro is bad for the eurozone economy. So every time the euro went up, euro INR say around 89 and above, some official from the ECB came out and said it's bad news for the economy. Eurozone cannot absorb a stronger euro. And a combination of this is what we have got, is a correction in the euro INR from 89.5, in fact 90, back to 87.50 on the Feb futures. There is a possibility of further downside towards 87, but in case 87 breaks, then we have a problem, because then it can slide all the way down to 86. So this zone between 87 to 87.40 is a very strong support zone on the euro INR. GBP, on the other hand, actually at this point in time is going to be range, because it lacks the dominant factors to take it up or significantly down. Because the Brexit is done, there are teething issues, but that's not going to be of a significant importance for the market. And Bank of England is now sort of not open to going for negative interest rates in the UK, which would have been very, very negative for the pound. So what do we have in our hands? A range bound kind of a market in GBP INR. So possibly, let's say 99 to 100 and 100.5 could be the immediate range in the Feb futures. If the Feb future is able to sustain above 100.5 or 100.6, then we have a breakout on our cards, and it can extend to 100.1. But unlike the last few years, there is no dominant theme in pound. Please pay attention to this fact. There is no major dominant theme in pound, which means there is not enough fuel for pound to really move up or down by 10% plus like it did over the last 6 to 7 months. Even the dollar internationally has reached a level where it's neither able to move up or nor go down. So we could be in for a few months of this range bound action. So you have to trade accordingly, change your style of trading in pound. On the yen, we have been bearish on the yen since 70.20 and continue to be so, because the rising yields in America, the US bond yields, is actually making the US bonds quite attractive for Japanese investors. And when the Japanese investors have to buy US bonds, what would they do? They will sell the yen, buy the dollar. So that's going to push a downward put a downward pressure on the yen, and that's what we are seeing right now. Yen INR has dropped from 70.5 all the way down to 69.30 on the Feb futures. There is more downside left, and it can even test 69 levels. Closer to 68, 70, 69, that zone has held out fantastically well over the last 9 months. So there, if it is showing signs of bottoming, we'll definitely like to go long, but not at current levels. So keep an eye. 68, 70 to 69 is the zone to keep a watch. If the bottoming is happening, if it is happening, please go long. So that's it, folks. Have a fantastic week ahead. We'll be back with our weekly webcast next week. In the meantime, I'll keep sharing my daily audio cast right in the morning. See you.